Welcome to What's Hot and What's Not in the month of April. Today I'd like to take a look at the different sectors of the market, which ones tend to perform well in April and which ones not so much. We'll take a look at April overall, seasonal trends. It tends to be one of the better months of the year. And we'll take a look at the S&P 500, where we stand on a technical basis as we're getting close to the end of this favorable 6-month period for the stock market. Let's jump right in. Let's start by taking a look at my Thackeray's 2024 Investor's Guide. Okay, so here we are. If we take a look at the month of April, here we can see the April tends to be really quite strong in the first part of the month. In the second part of the month tends to be flat. Now, I'll talk about that in a second. April overall, on average, from 1950 to 2022 is the second best month of the year. Look at the daily bars here. This is the frequency of performance of positive for each of the trading days. This is really strong to see that many daily bars being well above 50%. But it doesn't mean it's going to play out this way at all, or even we're going to see a strong run into the first, well, let's call it 2/3 of April. But nevertheless, that is a strong seasonal trend overall, and we'll talk about that in a second. If we take a look at the different sectors of the market here, from 1990 to 2023, you can see here that the energy sector, this is ranked according to the average gain, descending order. So energy tends to be one of the best performing sectors. Yes, it has been actually performing well in the month of March. April is also no slouch from a seasonal perspective. And this column shows you the frequency of outperformance compared to the S&P 500 in March. Materials tends to perform well in April. It has been outperforming recently. Financials, consumer discretionary. Let's go down. Information technology. We're going to take a look at that sector. It tends to actually slightly outperform the S&P 500. Now, that outperformance is in the first couple weeks of April. So we tend to see the technology sector outperform in the first couple weeks. But I have some concerns with that sector overall from a technical perspective. And consumer staples is close to the bottom here, but we have to take a look at it from a seasonal perspective because it tends to start a strong seasonal period later in April. So we may not be there now, but we'll take a look and see where we stand now. Also as well, if we take a look at a couple other sectors that people follow, look at gold here. Gold's been performing really well. It tends to be positive in April, but it's one of the weaker months of the year for gold, and only outperforming the S&P 500 44% of the time. If we flip the page here, this next page in my book shows the 18-day earnings month effect. These are calendar days. Look at the earnings months, January, April, July, and October. They all start the earnings seasons. And if you take a look, if it's the first 18 calendar days tend to perform well for those months, and April is in there as well. If we flip the page again, we get to consumer staples. I want to point out that consumer staples can do well all summer relative to the S&P 500, depending on what's happening. But its real sweet spot to outperformance is April 25th to May 31st. And we can see here in that time period from 1990, it's been average gain. It's not a huge average gain because this tends to be a weaker part of the market on a seasonal basis. And not a performance, but a positive performance 73% of the time. So let's take a look and see where we stand with the consumer staples sector right now. Okay, here's the consumer staples sector using XLP. This is relative to the S&P 500. Look at this positive trend. That's a great trend, straight up, well, on a 45-degree angle. But here's the concern. Look at this relative to the S&P 500. It's been a downward battle really taking place. That's actually a healthy sign for the market where the defensive sectors underperform. But really, if we take a look here, we're taking a look at this here. We're starting to see a little bit of a bottom taking place ahead of its strong seasonal period coming up shortly. I'm going to draw another line here. Let me just go back a couple of lines here for a second. And look at this line here. Whoops, not very good. But what we want to see is we want to see a breakout above that trend line for the consumer staples sector relative to the S&P 500. That would be a positive development, especially as we get close to the start of the strong seasonal period for the sector. Next page in the month of April, my book is government bonds, U.S. government bonds. And, well, I'm not going to dwell on this. In 2022, they performed very poorly, and investors don't like them anymore. But they actually did quite well on an absolute basis for starting in October to the end of the year. And they've been underperforming recently, but they do have a strong seasonal period starting shortly, which would be in May. The real sweet spot to this trade is really August and September. But just something to watch out for and keep on the horizon, knowing that the strong seasonal period does start shortly. According to the research I did back in the 1990s, we tend to see government bonds tends to perform really well 2 weeks after the market peaks. It's still a bit of a lag as far as the market flows go, but just definitely something to watch out for. If we flip the page again, here's Cintas. Stock here starts a strong seasonal period May 1st, so coming up shortly until December 21st. I'm not going to go into that, but it's definitely something that you can take a look at yourself. And we're into the month of May. Now, I want to go back here, and I want to go back to here's Eastman Chemical. Just flipping the pages here. Eastman Chemical is one of the most seasonal stocks I've ever seen. It has a strong seasonal period from January 28th to May 5th, and a really, really weak seasonal period from May 30th until October 27th. Look at this. Look at the results here. So this is the period from January 28th to May 5th. Look at the strong gains that we see in the stock. And here's the weak seasonal period from May 30th to October 27th. Look at the weak performance in that time period. It tends to be negative and has not been positive very often at all. And look at here as well in the strong seasonal period. April tends to be one of the better months of the year for Eastman Chemical. And if we take a look at where we stand right now from a technical position, here's EMN, and this is relative to the S&P 500. Look at this. Overall, the last few years, stock hasn't really performed well, but we saw this bottom here. We've seen a bottom here. And look at this. Right after the start of a strong seasonal period, look at it outperform the S&P 500 on an absolute basis. It's been doing extremely well as well. It's still well away from the high that it set back in early 2022. But the key here is it started a seasonal period and has been performing well. And April tends to be a positive month for the stock. So we could see it move higher from here. I also want to show you the energy sector. Although it is in my February chapter for the book, it does have a strong month on a seasonal basis in the month of April. Now here we are here. This is using XOI here, and you can see from February 25th to May 9th, it has a strong seasonal period. And I've got the numbers going back from 1984 to 2022. And then if we take a look at the monthly graphs here, look at March. March tends to be a strong month, and it has been for the energy sector. And April as well. So the bar represents the average, the cross represents the mean, and the diamond represents the S&P 500 average gain. You can see the strong outperformance in March, and you can see also as well April tends to be a strong month on an average basis. Some strong numbers, average 3.8%, 3.6% I should say. And the frequency of a positive gain tends to be strong in April as well. So yes, the energy sector has done well, but it continues to do well. Now, it's important to note that the commodity sector of the stock market, we can see some wide dispersion in gains or losses as well as far as monthly performances go. Just the nature of the market, there's large exogenous variables that affect those sectors, but at the same time, we are in the strong seasonal period. It has been performing well, and as well, the technical pattern actually looks quite good. So let's take a look at that. Okay, so we're using XLE for the energy sector, XLE relative to the S&P 500. Look at this. I'm going to put a straight line on here because look at what we're seeing here. Okay, so that was a resistance, and these are the rising bottoms. So all of this really is rising bottoms going all the way across here. It didn't draw that particularly well necessarily. But the most important thing is here is this is the resistance line. And look at this. This is a breakout above resistance. So all of the technicals here from that perspective are positive. The energy sector really hasn't performed well relative to the S&P 500 since late 2022, but we are seeing a bottom. Right after the start of a strong seasonal period for the energy sector, we've seen that start to pick up here. So that's been a positive development overall. It looks good from that perspective. It is overbought on the RSI level, so we could see a pullback here, but it's important to note that the month of April tends to be strong, and we have a positive technical pattern for the sector. I want to take a look at the technology sector. The technology sector can do well on a seasonal basis for the first couple weeks in April. Not particularly a strong period of seasonal strength for the sector, but But there are some concerns with the sector recently. So we have seen it really start to underperform the market. So we could see a bounce back here a little bit, but it's still important to take a look at. Here we are using XLK. This is XLK relative to the S&P 500. We're seeing a rounding out pattern here, which isn't very good to see that taking place. But I think the real key with what's taking place here is if we take a look relative to the S&P 500 and we draw a straight line going across here, what we've seen here is we've seen a breakdown taking place. So we've broken below that upward trend line. Really, relative to the S&P 500, the technology sector is really going back into November here. And that's really been taking place since January. So a lot of investors haven't picked up on this yet. So that money's flowing into other parts of the market. Right now, we're seeing that flow into some of the cyclical sectors of the market. The defenses have been lagging behind. We are seeing some indication that they could be picking up as well. But this is the key for the market because this could cause rotation in the market as the money goes to other areas, or it could be an indication that investors are becoming uncomfortable with the market. I think we could see a rotation initially first as well. But let's take a look at the S&P 500 on a technical basis at this point. So this is a graph of the S&P 500. This is great. Here we are, late October, right on seasonal Q, by the way, right? Actually, right on the date that I have established many years ago as far as the bottom of the market here. And we've really seen this take off. You can't really complain with that. But there is a technical, it's showing we could see some weakness ahead. So at the same time the market's been going up, look at the RSI. It's been heading lower. That's that divergence taking place. So market's heading higher, price momentum heading lower. It's not a timing indicator. You can't say, oh, look at that, it's time to get out. It just says, look, the longer this goes on, the more susceptible you see a market correction. At this point, it's going to be difficult probably for the RSI to pick up here. And we could actually start to see the S&P 500 start to weaken a little bit. So it's more of a conditions standpoint. But here we are. We got 1 month left in that strong seasonal period, 6 months seasonal period for the S&P 500. So let's hope this continues to go higher and we do start to see a little bit of a pickup here. But the longer this goes on, the weaker diagnosis it is for the market to actually have a period of softness ahead. I want to show you the relative rotation graph to show you what's happening with the major sectors in the market. So first of all, this quadrant is leading, this is weakening, and this quadrant lagging, and this is improving. This bottom represents the relative strength ratio between the sector and the S&P 500, and this is the ratio for momentum. So we've talked about the energy sector improving and performing well. Here we go. So it's gone from lagging to improving. And we talked about the technology sector actually weakening, and that's exactly what we're seeing in the relative rotation graph here. And if we take a look here, utilities tends to be one of the better performing sectors in the month of March, and it was. It was in the lagging, but we did see that trending higher. If we take a look, we got the industrial sector and also as well the communication sector in the leading. So we don't see a lot of leadership in the market. It tends to be quite strong, quite narrow, I should say, overall. But so I do think the keys are here. We're seeing a positive performance for the energy sector and the technology sector lagging behind or actually weakening at this point. It's been great for the market from a seasonal basis. We've seen 5 months in a row of positive performance for the S&P 500, which has been really positive. We've seen really positive straight line action for the S&P 500 over this month. We haven't seen big drops taking place. We got 1 more month to go for that, the whole month, so the complete months for the 6 month seasonal period. So from November to April, and April's our last month here. It'd be great to see that finish off. I think the key here is that we take a look at the market performance in the first half of April. The seasonal trend is for the stock market to move higher in that time period going into earnings, because investors tend to push up earnings, push up the market heading into earnings. If we see that not play out so much, that could be an indication that investors are starting to get a little bit nervous with the markets. I want to really focus on the technology sector. Yeah, it could do okay coming up here, but if it continues to underperform, that could be indicating that A, the money's flowing to other sectors of the market, which would be taking place. But where's it going? Is it going to the cyclicals, which it has been, or is it starting to go into the defensives, which would be a little bit problematic for the market as we finish up the strong 6 month seasonal period for the stock market? So I'm really going to be watching for the market, what's taking place in this month, and see how the technology sector fares. If we do see some sort of a pickup in that, if it continues to underperform, and where's the money going? If it starts to flow into some of the more defensive sectors, then I'm going to become a little bit more concerned with the overall market health. So let's take a look and see what happens this month. Thank you very much for joining me today.